Yo, what's up, financially lit fathers? Today, I want to share with you why, in my humble opinion, every working father in America should have a home-based business to cut their number one expense, which is taxes. I got my calculator out and I'm going to try to do some math on the board. If some numbers are off, then listen, man, do not kill me, right? My man, Doc Winter would do this, right? There's 1 through 9. So if I miss a number and I mess up, then just get the number out the box, right? Matter of fact, he'll do this too. Hey, if I misspell a word on the board, then just get the letter out the box and make the correction yourself. But I want to share with you the power of having a home-based business and turning everyday expenses that you already have into legit, legal tax deductions, and how that actually impacts your taxes, because we heard that wealthy people pay very little in taxes. But I'm going to show you on the board how that happens and how you can take advantage of the tax code in the same way. So let's get to it. All right, really quickly, if you don't know me, I am Cortez Hustle, founder of the Financially Lit Fathers movement, an organization that I put together to help raise the financial IQ of working fathers all over this country and eventually all over the world by leveraging the power of entrepreneurship. And we focus on businesses in the financial services space. Financial services is $11 trillion globally, $4 trillion here in the US, if those stats are correct. I can't remember where I got them from, but nevertheless, there's a lot of money in the financial services space. The reason we focus there is because if you have a business in the financial service space, you're incentivized to not only increase your own financial IQ, but in essence, you get paid for helping other people increase their financial IQ as well. There's a link in the comment if you want to know the business that we actually recommend. You can check out that link in the comment. So let's do a little bit of math here, right? Let's just say you, my friend, make $50K on your job, right? And let's just say for kicks and giggles, you join the Financially Lit Fathers movement. It's a couple $100 for you to start the business that we recommend, and a couple $100 a month for you to maintain that business. So let's just say your investment every month to run your business is $200 per month. Well, what do we know? We know that there are 2 sets of tax codes in this country. There's a set of tax laws for employees, and there's another set of tax laws for landowners, investors, and business owners. Well, any money that you put out to conduct, manage, or grow your business, Uncle Sam says you get to write that off as a business owner. There's 3 things that you have to do. Now, let me say this, and I'm gonna put it on the screen too. This is not tax advice. I'm not a tax preparer. I'm not an enrolled agent. I'm not a CPA, any of that stuff. This is me telling you what I've learned through my own studies, talking to my own tax professionals. You have to do your own research, talk to your own people, and make sure you get with a certified licensed professional to get an understanding of this stuff. But according to what I understand, there's 3 things that the IRS requires for you to take advantage of these strategies. Number 1, you have to work your business on a regular and consistent basis. They determine that 4 to 5 hours per week is regular enough and consistent enough, but that's every week. That's not on average. That's not me working 20 hours one day and then taking the rest of the month off in my business. No. Every single week, you need to be consistently working your business. Number 2, you have to be trying to make a profit, right? This content that I put out is proof that I am trying to make a profit through educating and hopefully attracting the right people who want to join me in the Financially Lit Fathers movement, in which case I make a small commission if you join the business that we recommend, right? So work regular and consistently. Attempt to make a profit. And number 3, keep good records, right? If you join the Financially Lit Fathers movement, one of the tools that we give you is an expense tracking tool so that you can keep records of everything that you buy to move your business forward, right? So let's just talk about some common tax deductions and how it helps impact you financially when it comes to saving money from taxes. So we said that with us, it'll cost you a couple $100 a month to run your business. So if you started January 1 through December 31, that's 12 months times 200. That's $2,400, right? $2,400, right? 12 times 2 is 24, right? Now let's also say that you, like me, have a spare bedroom in your house, and you use that spare bedroom, and based on the home office deduction, let's just say you also get to save another $200 per month in rent as a tax write-off. So that's another $2,400 in tax deductions for your home office, right? Super cool. Well, what kind of other expenses do you have that are necessary and ordinary for you to do the type of business that you are going to do? For me, I'm in the financial education business and financial services. So me educating you in a YouTube video like this is ordinary and necessary in my business, right? How do I get these videos done and created? Well, I use my cell phone in this case, but I also have a DSLR camera that sometimes I like to use. I also have a Sony camcorder that sometimes I like to use. Well, guess what? Those things are tax deductions. Let's just say I invested $1,000 in a camera and $800 on my DSLR, right? But what do I need to get this stuff up on YouTube and all of that stuff? Well, I need Wi-Fi. Well, if I pay $100 a month for Wi-Fi, right, and I didn't do anything else with it, now in my case, that $100 a month is not 100% tax deductible. Why? Because I also use Wi-Fi to stream TV. So I'm at about 70% of the Wi-Fi usage in my house is for business, 30% is for personal. So if I did the math on that, that's 1,200 times 70%, that's $840, right? Of my Wi-Fi bill is a tax write-off, right? And just for the sake of kicks and giggles, I'm just going to do one more of the biggest tax deductions that is out there for you. And I don't know if you know this as a working father, you got children, right? You can allow those children to help you in your home-based business and pay them $13,850 for tax year 2023. I'm fairly sure that that's the standard deduction this year. So let's just say you put that child to work in your business and you paid them $500 every 2 weeks to handle your social media, right? So that's $1,000 a month times 12 months. That's $12,000, right? So that's $12,000 that you paid them. So what happens is you made $50,000 on your job and you have a home-based business. So you get to subtract all of this money from your from your taxable income that you made on your job. So let's just add that up really quickly. So we got 12,000 plus 840 plus 800 plus 1,000 plus 4,800. That's a total of 19,440. So if we do 50,000 minus 19,440, that brings our taxable income down to $30,560. Now, you tell me, which one of these would you rather pay taxes on? Would you rather pay taxes on the 50,000 or the 30,000? Now, if you had any profit in your business or any income in your business, then that income would be added to this number, right? But it's not uncommon for people who operate home-based businesses to not have a whole lot of revenue in their first year, even their first up to their first 3 years in a lot of cases. And then we did not discuss all of the tax deductions that are available to you. We don't have meals in here. We don't have travel in here. We don't have miles that you might be putting on your car. Like I put a lot of miles on my car driving Uber, right? Which are, I get the mileage deduction if I go that route with my tax preparer, right? We didn't put my cell phone bill on here. We didn't put the percentage of the electricity that I use in my home. A portion of that is a tax write-off. Y'all, there's so many. I don't have my books. I don't have my courses. I don't have the software that I use on here. I don't have any of the conferences that I go through and the webinars that I attend and the continuous education that I invest in. I don't have any of that stuff on here, right? So this is how a business owner can get this number down to almost zero. This is why, in my opinion, I believe that every hardworking father in this country should have a home-based business that they legitimize. Now, chances are you already got a side hustle. You help people move, you fix brakes, you do a little carpentry, a little plumbing, you ain't no telling what kind of stuff. You're coaching, youth sports, all of that stuff can become a legitimized home-based business where you can write off a lot of those expenses and save yourself some money when it comes to taxes. So this is me just sharing with you what I'm doing, and this is why we put the Financially Lit Fathers movement together, because in the comments, drop a note in the comment if you didn't know that this was available to you. See, a lot of us just don't know, and that's why I do this, right? Now, speaking of which, if you want to check the description, I have a link to our wealth creation playbook, which outlines everything that we're all about in the Financially Lit Fathers movement, including the company that we recommend that you get started with and how we help you grow that business by giving away a free course, right? We figured out lead generation for all of our members. And if you're interested, click the link. It's 100% free. All you got to do is opt in and you can start taking those lessons today. So appreciate you guys for tuning in. Until next time, get your money up because you absolutely can do it. But more importantly, you deserve to do it, each and every single one of you. Now hustle up.